Hello, hello, hello. Happy Wednesday, July 5th, everyone. Welcome back. Hope everyone who celebrated the 4th had a wonderful day off yesterday. And if you didn't, because you're overseas or something else, hope it was a quieter trading day for you. Good morning, Chris. Good morning, Martinez. Good morning, Patrick. Good morning, Anissa. Thank you for joining us today. Let's just get started. Hey, options 22, good morning. All right, what do we got going on this morning? Redbook just came out, slight bounce in that, but still in the dumpster. Hey, Jacob. We got IBD, economic optimism, coming out at 9, and factory orders, both somewhat minor. But factory orders, unless it's a huge miss, might have a little fuel to the fire. We've already had a pretty substantial pullback. We had some bad PMIs coming out earlier from Europe and China. We have the FOMC minutes this afternoon at 1 p.m. Central, and then Williams speaking. So let's just also glance ahead because we had a day off yesterday. What's coming up tomorrow? We have, remember, crude numbers would normally be on Wednesday. They are tomorrow if you're trading crude. We have the ISM services, especially IM services prices. So ISM numbers tomorrow morning will be pretty big. We, of course, have the unemployment numbers. And then Friday, we have non-farm payrolls. So we have a lot of potential things that can still move the market on the rest of this shortened trading week. This morning, we're seeing pretty much, red across the board, especially from the mega caps. Oil is holding in there. You can see here, energy is about the only thing that's positive. Let me refresh this, see if healthcare, no, healthcare even shifted negative. So everything negative except energy, basic materials, technology, and financial leading it down. Fed Watch tool is still at a rate hike coming up in July, which is 21 days. We still have the CPI, of course, the unemployment numbers, and then the CPIs next week, and that's it for the major data before the Fed meeting. But it's looks like a hike, and then the pause through January still at this point. Still in extreme greed. So that's where that sits. All right, in terms of gamma, which is interesting. Why gamma flip is about 44.30. We're trading 44.68 right now, so we're in positive gamma. The big gamma area also where delta keeps kicking in even more is this 4400. 4400 because you're losing a lot of call delta, and you got some put gamma and delta kicking in there. And what's interesting is that is 4400. If you look up here, it starts into the negative gamma territory, so you get gamma acceleration down here. Now, why is that important? Because it starts feeding on itself if we head lower, not saying we have to head lower, and the trigger, if we start getting that negative gamma and lose that 4400 to trigger for the massive double top pattern, remember we have potential, only potential double tops. S&P, NASDAQ, Dow, Russell, the big five that we track right there got a lot of potential reversal signals. They might never trigger, but we are also very extended. We have not touched, the S&P has not touched the weekly rotation zone till the end of May. Now, could it touch there without ever triggering? Yes, because look where the weekly rotation zone is. Right at the potential double top trigger. All this is lining up. Does not mean it could come down here, bounce, reset the weekly EMAs, and then keep continuing higher. So know, if you're longer term, know where your trailing stop levels are. If you're short term, yes, there might be some bearish signs even before there, but the big trigger would be 44.6850 on a closing basis. Good morning, John. So that's where that sits. Then the targets would be 43.06, 42.75, and 42.43 roughly. Ahead of that, it was just a breakdown with some, especially European PMIs breakdown here. I'm just watching. We're right now below the 4-hour rotation zone. So on any bounce, you have the resistance and the 12.5 harmonic and a prior harmonic level all coming in at 44.80. So any rally, that's my first target. On a drop through this 44.65, 44.50, the 4-hour 50, and the 37.5 harmonic, and 44.50. It's also in the clear path move, so the next target would be 44.33. Unless we go to take out the highs from Friday, these numbers will stay in place until those highs are taken out. So you can mark this down even for the rest of the week. 44.33, 44.17. A close below 44.17, at least on a 4-hour basis, which is also a key breakout level. You see here from back Tuesday to 27th, resistance, pullback, first cross rotation zone, retesting. Look, dip, 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 but closing all above it. So that verified that that turned into support, and that's right around that 62.5 level also. You get a close below there. It's also a close below your major support and the 62.5. So you have a statistical probability shift to retest the low area. The low area back from June 20, Monday the 26th of June. And then right below that, you have the trigger for the double. So that's how I'm mapping out sort of the not for today. I mean, this could take me through next week unless we take out the highs. Does that mean this move has to be over? No. We could come back. It could even look where the 37.5 is on the daily. We could come back to here over the next couple days, bounce off up here, and go to new highs. That's why the trend is still up. What would be the major trend killer is if some of these doubles start triggering in the short term. That would be the major trend killer. NASDAQ, you have the double, pretty much laying it out the same. NASDAQ, we still, over the next couple of days, it's came close at 87.5, didn't quite touch it. The major support level I'm watching for is 15.2. 15.2 for that. That's the major support level. And today, the first target would be about 15.320, 15.315, 15.320 on any bounce. Then the target area would be Friday's highs. The key little level it's coming into the open is about 15.235. And then we got about 15.2. So I'm not going to flip those around yet, but if you wanted to know, if we don't take out Friday's highs, the major level is 15,055 on a closing basis, because then it would statistically favor at least approaching those lows that make or that could trigger the double top. And from the weekly standpoint, weekly cycles are still heading down on both the S&P and NASDAQ, and daily cycles, I am looking for them to top by Friday and start the rollover move by Friday at the latest. So then we'd still have weekly heading down, which can still head down for a couple more weeks at least, and we'd have daily. So we'd have cycles in sync again. Keep that in mind. Hey, Christoph. Is it a double top of the ES and a cup and handle for the one-day chart? We don't have a cup and handle yet. You'd have to come back down, like hit on this daily rotation zone, and then rotate back up, and then you'd have a potential cup and handle. And also remember, if it rotated back up, the double would be turning into a triple, and then we'd really be watching for the breakout again higher. And it'd be a triple on the daily only. It would not be a triple on the weekly. You'd still have a potential weekly double top in place, even if we form that double or the cup and handle. Dow, same thing. The trigger point for the Dow is 33,855. Key support I'm watching today is about 34,375 to 34,400. Russell, massive double top, but that's a long way off. And what's interesting is that's in the area of the 200. The Russell this morning, I'm looking at about 1890 as the first level of support. The Russell did come up and hit that 87.5. So if we, oops, didn't want that one. If we flip this around, Remember, everything's got that same cycle pattern of top, top, daily, weekly. The key level for the Russell on the closing basis is about 1859. VIX, I'm still keeping an eye on 15, especially if we hold and get momentum above there. Until then, that really starts tipping me into short-term momentum bearish. If we get a follow-through close above 15. We have not had, well, the last up close, really the last strong up close approaching that level was back on Monday the 12th. Other than that, we've had a couple minor up closes, but nothing approaching a major VIX breakout level. The DAX could not get the close above the 62.5. I'm still expecting it to retest some of these low areas, especially with those weak PMIs, but it's still in consolidation. The notes trying to break down, which is higher yields. The next minor target is 111.15. Next major target 110.27. And just looking at the shorter term, come on, give me my chart. I really hate the way they've done it now with this, but that's just the way it goes. We don't have a double bottom. Looking at the shorter term chart, it's a multi-bottom. So I'm still watching for a push lower. So it almost looked like a double bottom here on the daily, but it's a multi-bottom and still not big enough reversal. The yield, I'm watching for the breakout in the yield, and my next target is 398. The 10-2s, trying to put in a potential double bottom. So we'll see if that does trigger. Dollar index. Just chugging along, moving sideways. I'm really still watching. The only thing that gets me bullish in the short term is the close back above 103.20. Crude, we had the double confirm on last Thursday, trigger last Friday, little pullback on Monday, and now virtually the second, and also after it hit the first target on Monday, then it pulled back. Second target almost hit right now. Final target 72.57. I'd just watch be 72.50. The only thing then is if it follows through with a close above the 72.60 area, then I'd be watching for 74.30. Other than that, if it hits this and pulls back, there's, it's still in consolidation and it could peter out, especially with daily cycles getting to the top. So that's not an overall major bullish pattern yet. Gold approaching key resistance about 1942 to about 1947. If we get a close back above 1948, I'll watch for a continued pop in gold in the short-term basis. Yen, nothing yet, although if we do start really breaking below about 144, watching 40 bigger pullback closer to the bottom of the daily rotation zone, Euro, a sloppy channel. It's got to get back roughly above about 109.30, and then I'll be watching for higher prices in the euro. Pound has hit the first level for the double top and bounced, and we're into a multi-day bounce. A close above 127.52 takes the remaining double top off the table. The remaining double top levels off the table. Bitcoin, not able to break out, but unless we really start closing below about 29,450, still watching for a potential breakout. And that's a short-term breakout, not a major breakout. What else do we have? Tesla, technically, has a double top. This is still valid, a potential double top, but a long way off from triggering. 240.70, slight gap down today. The only thing, if we continue with a weak market, I'm watching at least for a partial gap fill. The full gap fill would be 261.77, and that would take it back to the daily rotation zone again. Remember, we launched up back into the rotation zone, and then went to new recent highs that formed the potential double, and this is within the rules. NVIDIA, I'll get to spiders and Qs in a second, not yet in double top territory, and that would be a really sloppy one. Spiders Spiders, you're welcome, John. Spiders also have the potential double top in place. If we start breaking below 441.02, the targets are 439.40, and then the gap fill and close to 50% harmonic, which would be 438.11 to 437.75. So those are the clear downward targets for that. If it does sustain, the little shorter term levels are about 422, 442.66, and then it would be to the gap fill at 443.89. Then you have 445.49 and 446.80 roughly. Those are all your levels for the spiders. On the Qs, also potential double top territory. The Qs, the 87F was 370.94. This hit 370.93. I'm calling it virtually right there. So it virtually filled that. First key support. Let me flip these around real quick. Flip these around. So 367.60. Then I'd start watching 365.90 to 366. Then you have a gap left behind, but before the gap fill 364.25 area, and then the gap fill 363.81. So that's the way it maps out, and then 362.59 on a closing basis, and then I start watching for the potential trigger, because that would favor a return to this low area from Monday the 26th. Those levels are in place unless the NASDAQ takes out Monday's highs. Okay? And the first key level would be this 365.90 to 366. So there we have it, everyone. And also remember the Qs at the top and the weekly still heading down. So we have some potential significant topping patterns, but the trend is still up. So I'm saying, unless these potential topping patterns trigger, it's still in trailing mode. If these potential topping patterns trigger, then it's definitely in at least short to potential medium term pullback mode. All right. That's where we'll leave it today. I hope everyone has a wonderful trading day, and I shall talk to everyone later. Bye for now.